All right, welcome to the weekly prep video for the week of August 25th to the 29th. In this video, we'll be taking a look at the action over the past week from the indexes, liquid leaders, industry ETFs, then end the video with long and short setups going into next week. If you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market takes throughout the trading day, along with a live stream at the market open, you can sign up for the Discord using the link below. Getting into it, what a day we had on Friday. Everyone was waiting for Jerome Powell's speech, and the market interpreted his words as extremely bullish. More likely than not, we'll get a rate cut in the future, and the markets ripped on that speech. Nasdaq finished Friday up 1.55%, reclaiming the 5-day, the 10-day, and the 20-day moving average all in one day, but did end the week down 0.9%. So definitely some weakness in US mega cap tech, but some strength elsewhere in the market for sure. The S&P 500 finished Friday up 1.5%, up 0.28% on the week, and closed at a new all-time high. Extremely bullish action there with a little gap up over the 20-day moving average and a close right at those highs. But really, the story was small cap, mid cap, basically anything that is impacted by interest rates. So taking a look at the IWO, which is the growth stocks of the Russell 2000, huge gap up over well, I guess we were already over the 20-day moving average, but over the 10-day moving average, open right near the low of the day, closed near the high, at a new high for 2025, and really not too far off all-time highs. So all-time highs 340. Right now we're trading at 310 or so. So another 10% to all-time highs there. ARKK, good move today, up 4%. Uppercut and fail, the very slight resistance gap up top. It looks like we did put in a higher low overall. Now we got the 50-day moving average catching up, a couple more days tightening up here, and you have a really, really quality setup on this chart. And Bitcoin using IBIT as Bitcoin was looking like it was about to break down, undercut the previous lows. And instead of breaking down, we had a strong action back through the 50-day, the 5, the 10, the 20-day moving averages. And Ethereum, kind of in that crypto space as well, hit a all-time high. So great action out of that group. Taking a look at the 9 liquid leaders, we had some changes this week, but overall, those leaders are acting well. Really, the strongest stock that I've been watching has been BE, Bloom Energy. Little undercut of the 10-day moving average and support gap when we had that follow through to the downside on Wednesday morning. Undercut that area. I'm kicking myself for not buying it at 41.20. Since then, reversed higher highs, higher lows yesterday, and then just exploded higher into new highs today, up 8.2%. SoFi, another very strong name. We'll take a look at the XLF financial ETF, which made new highs. So we got the group theme behind it, and just really strong action out of SoFi. Shook out the 20-day moving average, got pretty extended to the downside, reversed, closed right near the high of the day on Wednesday, followed through on Thursday, followed through on Friday, closing at a new high, up 7.2%. FUTU, the other big theme on Friday was Chinese equity, which, if you've been following along, I've been pounding the table on every single video. Watch Chinese equity, watch Chinese equity, watch Chinese equity. They continue to outperform. FUTU, another 52-week high, another name that's pretty close to all-time highs. And one of the few Chinese names that are already there. Finished the day on Friday up 5.65%. Robinhood, a little bit weaker overall. I would have expected with the crypto, with financial ETF at highs, a little bit more strength here, but maybe the positioning in tech names is just too overwhelmingly bullish where there's just less people to buy it. Not bad action, but I would have loved to see this like close near high of day, up 2.8% on the day, back at the 10-day moving average. So we'll see how it responds next week. Really good shakeout. Didn't quite get to the 50-day moving average, but good shakeout to the support gap low here on Wednesday. And then good close on Friday, just not incredibly well. Uber, new addition to the list, right near all-time highs, just looking for a pullback into that 5-day moving average and gap zone to be supported. NVIDIA with earnings on Wednesday. We'll get to other earnings in a second here, but earnings on Wednesday with NVIDIA. Strong close on Friday, back capturing the 20-day moving average right by that 10 in the 5 day there, finishing up 1.7%, but down 1.4 on the week. ALAB, another name that I would have expected a little bit stronger of a close, but after the shakeout to the 20-day on Wednesday, overall good action here. Uppercut and fail the resistance gap, so just needs more time to chop so far. Down 3.6% on the week, but up 0.9% on Friday. Reddit, another name with a little bit of weakness, finished Friday down 0.7% after the uppercut and fail of the resistance gap. We did bounce off the 20-day really well, so we'll see just maybe more chop consolidation here before we're ready to go higher. And then MP down 0.7% on the day on Friday. I actually have to reduce this support gap a little bit. Another uppercut and fail of the resistance gap, right at that 5 and 10 day moving average. Getting nice and tight here, so we should see from contraction comes expansion. We should see some expansion here. Which direction? I would hope it's to the upside, but if it didn't get going today, I'm a little concerned with it. But we'll keep it on the leaders list because it's acted just extremely well this entire time, and really no real reason to worry just yet. I We'll jump into the industry ETFs next, and we'll go through each one of these. We'll sort it by price percent change on the week to highlight what was the strongest groups this week? First one, MSOS. This is the cannabis ETF, a new addition to the list. I kicked out XOP since I have XLE, and this is an emerging theme. Really nice flag into the 10-day moving average. Got going. Today's low bounced off the 5 day, closed down on the day because money was flowing elsewhere. But overall, this is not a theme to ignore. I think this is one of the themes to really focus on here, especially if we get a little pullback to the 10-day, high or low, and this flag has more time to consolidate. Lots of power here, finishing the week up 11.7%. Solar stocks, again, things that are impacted or rate sensitive, exploded on Friday. Solar stocks being one of them, finishing the week up 5.2%, finishing Friday up 6.1, and a new high for the week. Little gap up, open on the low, close on the high. I said this before, but when solar stocks gapped down on the news that the tax credit was going away, but it didn't accelerate lower, it actually put in a higher low. That was your sign that solar had probably bottomed, and now we're working our way in a stage two uptrend. KWEB, this is the Chinese internet ETF. Massive, massive move, or massive base, and we're right at the top of that base, looking for pretty strong action. Alibaba reports earnings on Friday. That makes up a lot of this ETF, so we'll see how that goes. PDD reports on Monday. But really just great action here overall. Gap up, close right near the high of the day and the high of this pivot, this weekly pivot. 3.5 year base. When this does break out, it'll have plenty of room to run. So really want to stick with my positions in FUTU and CWEB, which is the leverage version of KWEB, and then look to add on some Chinese exposure. Gold miners, GDX. Talked about how I really liked the action on Wednesday after this ugly bar on Tuesday, closing under the 5 and the 10 day. The best thing that can happen after an ugly bar is a gap up and a recapture of that bar's high, which is exactly what we got on Wednesday. Follow through on Thursday, follow through on Friday, new 52-week high. IYT, transportation ETF. This is, or Uber is a heavy position in this, so it makes sense with Uber acting well. This is acting well, starting to build the right side of the space. ITB, home builders ETF, has been a leading theme since the middle part of July. Once we started putting in some gap ups, reclaiming the key moving averages, look at these volume bars. Massive, massive accumulation all the way up the right side of this base. And now I would just say it's in a stage two uptrend. 50-day should catch up to the 200-day in a couple weeks, and we can hopefully really get this party started. XLE, actually some decent strength in the second half of this week. It's been acting weaker than most ETFs. We had a little test of the 50-day, a higher low, and then pushed through that pivot. Got through the 200-day moving average on Friday, finishing the week up 3%. XLB, not a group I spend a bunch of time on, but it's overall key moving averages and closed well on Friday. The more groups that do that, the better. XLF, this is the financial ETF that I wanted to highlight. Really nice like shakeout of the 50-day moving average back at the beginning of August, rallied back up, put in a higher low on the 20-day, and then made a new 52-week high, maybe an all-time high actually. Yeah, I think all-time high on Friday. So a group just emerging into new highs. That's a theme that I would want to be focused on. So think SoFi. Hopefully Robinhood comes back and starts acting well, but um, overall financials is a group to look into. XRT retail ETF, another new closing high for the year. Gap up. The stock AS really caught my attention this week. Had earnings, gap down, rallied back through, and is at a new 52-week high. That's kind of the leading stock in that group that I'm focused on. PEJ, Leisure and Entertainment ETF. So your Royal Caribbean, Carnival Cruise Lines, anything relaxation. Looks like the consumer is strong, up 2.2% on Friday at new 52-week highs. Good action overall. XLY, Consumer Discretionary ETF, also made a new high, not for the year, for the rally, not for the year, but overall the key moving averages, all the key moving averages are in the right order. That's a nice uptrend there. IYZ Communications ETF made a new 52-week high and then squatted a little bit, but still above the 5-day, the 10-day, the 20-day. All those are in the right order. XLV, more and more looks like that this is put in a bottom. We have multiple gap ups now, just like the home builders did once that trend eventually turned around. We still have a date with the 200-day moving average, so we could hit that, then sell off pretty aggressively and still like be basing in the stage one base. I don't think we're in a stage two uptrend just yet, but it does feel like we've probably put in a bottom on these healthcare names. Blockchain ETF looks great right now. Closed right at the 50-day moving average a couple times, but then popped through the 5, the 10, the 20-day on Friday. Working at this resistance gap, maybe needs a little pullback, a higher low, and then we can push through and start trending higher. Cybersecurity, really like the action today and actually this week. It looks like this is just putting in the left side of the base. Now we're flattening out and we can start working on the right side. If that's the case, that's a very like quiet stakeout in base after a pretty nice move off the lows, which in a strong market is what you want to see. So can't fight against that. We do have this resistance gap, 50-day moving average. Ideally, we get a little test of the 50-day, put in a higher low, and then we can really work on the right side of that base. Robotics ETF, ROBO, good shake. 2 days close under the 20-day EMA, then a gap up, little island gap. Reclaim the moving averages and are right at highs. This is another one that has been basing for a while, basically since 2021. So another kind of speculative group that has entered, uh, not entered the uptrend, but is back into a nice uptrend. XLP, consumer staples, a little bit weaker, uppercut and fail the resistance gap. Closed under the 5-day, still in an uptrend, but really not a group that I focus too much on. XME, metals and mining. I think I actually, no, not a gap there. But really strong action back through the 5 and 10-day moving average. This has been one of the leading stocks in the market. We'll see how it handles that resistance gap and highs. ITA was the leading group off the lows. Now it still kind of feels a little heavy. Two resistance gap to the upside. We closed right near the low of the day, even though we gapped up well. Maybe just needs more time to base, let that 50-day moving average catch up, but is kind of a group that I'm giving more time to to consolidate or pull back. Not really one that I'm focused on buying. Bio ETF, biotech ETF, a little disappointing today with the closing range. My I think my largest position, or right there with my largest positions, is LabU, which is the leverage version of this. So I was really hoping for a strong close. We didn't get it, but we're still above the 5-day moving average. We still closed at a new high for this rally. So giving this more time to work. It's not doing anything quite wrong. Just not even a strike against it. Just like something I raised my eyebrow at is the weaker close here. FDN, great move today. Little gap up, reclaimed the 5, the 10, the 20-day moving average, and then closed into that resistance gap. Again, big cap tech is just a little weaker compared to the rest of the market, so it makes sense that this is below a resistance gap. NLR, nuclear and uranium theme, great action on Friday in the second half of the week. And it really wasn't because of nuclear, it was because of uranium stocks. So UUUU, that was the one that really caught my eye. What was the other one? Take a look at that. LEU as well. Good bounce there out of LEU. Finishing Friday up 4.4%, still basically flat on the week, but we're getting that rotation from nuclear to uranium, so the ETF itself is holding up relatively well. Semiconductors finished the week red, down 0.7%, but good Friday, up 2% and back through the 5, the 10, the 20-day moving average. Again, uh, NVIDIA's earnings on Wednesday, that'll really determine what we're going to see here. And then software down 1.5% this week, up 1.4% on Friday. Still has a lot of work to do to get going. Maybe a rally to the 50-day, pull back, higher low. That's what I would be looking for. Overall, the group still feels a little weak to me. Before we jump into the long and short setups, I just want to go through some other aspects of the market. Got a update on the NAAIM. This is the Active Investors Exposure Index over 95%, and I start to get a little wary, and we're at 98%. And they take positioning as of Wednesday's close on this. Wednesday, we saw that flush and large buybacks. And if we're already at 98% after just Wednesday's kind of snapback rally, I can't imagine this would be lower next week, given the price action that we saw today on Friday. So we're definitely running hot here. But this is a secondary indicator. Until we see price actually confirm what we're seeing with overbought signals, there's really no reason to get aggressive on the short end, at least. I do have like some short positions from higher that are working, but the table's set for a move lower. But until we see like price actually moving lower, we get a gap down that doesn't fill to the upside. We see the leaders snap back to the downside with heavy selling volume. This is a secondary indicator. Everyone is long, and it feels like we're getting even longer here. But wait for that price confirmation to really press the pedal to the downside. Uh, if that's your thing, if you only trade on the long side, that's fine. We're in an uptrend. We just saw good rotation from the NASDAQ names, mega cap names to small cap. And honestly, the small cap stocks, I think there's still a lot of room left in that. So um, this does concern me a little bit, but price action still comes first. Other things to look at is the commitment of traders, COT data. Now, I just found out that this gets collected as of Tuesday's close, so it doesn't even include Wednesday's sell-off and snapback rally, doesn't include Friday's positioning. So we have to keep this like in mind with a grain of salt. But taking a look at the Nasdaq, we did see positioning come down a little bit, so it's not as overbought as we were last week, which I mean makes sense. We were so overbought last week. The Nasdaq pulled back. We saw IWO, IWM, kind of small mid cap stocks rally. So money rotated in the market, but didn't leave the market altogether, which is a great sign. So just a little bit of a pullback in positioning. Um, Still a little overbought there. E-mini futures for the S&P 500, basically neutral. Um, Not really an edge either way here. And then for IWM, the Russell 2000, we still see most people short this. Again, as of Tuesday, I'm assuming positioning. Assuming shorts covered a lot of their positions on Friday after Powell's speech. I could be wrong. If they got more short, that would be amazing. But we did see even coming into or after Tuesday, some of the shorts covering and positioning get a little bit more neutral, but still overall like a lot of shorts in the Russell 2000. And then also just wanted to point out we're still in earnings season, so make sure that you know the stocks that are reporting if you're going to own them or if you want to buy them. For me, PDD is a main focus. It's a Chinese name, reporting Monday before the market opens. We just saw MNSO gap up, run about 20% today. So Chinese stocks, again, main focus. We have EH, DQ, HDL, ATAT, BEKE, all reporting Tuesday before the market opens. But really, the most important one is Nvidia after the market closes on Wednesday. Snowflake, CrowdStrike in there as well. NTNX, something that I've traded before. PSTG, I've traded before. And then for me, like really being interested in Chinese names, Alibaba on Friday before the market opens is the main one. PDD is secondary. It's still very important, and I'll be looking to trade it on Monday. But Baba and Nvidia are the two with the most impact. All right, jumping into the long setups, we'll sort this by average dollar volume. So most liquid stuff first, least liquid on the bottom. First is Nvidia, or sorry, not Nvidia, Tesla. Wanted to zoom out on this. We've talked about the 4 year kind of base, very loose terms of base, but massive, massive uptrend from $12 up to $400 back in 2019 to 2021. After that, you need a long time to consolidate, and we've gotten that consolidation, and we're really starting to tighten up here. From contraction comes expansion in one direction or the other, and I really like what the chart did this week. We have this downtrend line that we broke out of, retested the backside of, got tight, and then pushed through all the key moving averages. I should have been on this trade buying through today or through Thursday's high. This is definitely a missed opportunity for me. We closed right at the high on Friday. Now I'm just looking for either a gap down and then a reclaim of the high on Friday as a buy point, or if we can pull into the 200-day right around like 328, I would buy that versus the low on Friday. Uber, a new leader on the list, just looking for a pullback in that 5 day moving average and support gap. At this point, the 10-day would be probably pretty close to that area as well. So just watching that as a spot to manage risk against the 20-day. NBIS continues to flag out well. We tested the 20-day on Wednesday shakeout, consolidated on Friday, tested the HVC and support gap low on Friday, and then pushed out, closed at the 5 day. If the market does have any like pullback or consolidation, pulling back in that HVC into the support gap is buyable versus the 20-day moving average. PDD, this is the stock that's reporting on Monday after the close. If we zoom out, you can see huge cup, huge handle, like multiple year cup, multiple year handle. If we get a gap up, I would be looking for an opening range break to buy because we saw MNSO in that same Chinese theme do that today after a big cup, big handle. We gapped up, opening range break, moved 9% from the open, closed up 20%. And this one's a little bit more liquid, so you could size it better. DraftKings is next. I really like this base on DraftKings. We're continuing to rally over the 5 day moving average. If you look at the relative strength line, this has just been clean uptrend for DraftKings for a while. Now just looking for a pullback back into the 20-day moving average and support gap here at $45 as a higher low entry. FUTU, Chinese name. To me, it's the leader in China. Just looking for a breakout retest. That would line up with the 10-day moving average after a couple days. So that like 178-ish area. I already own the name from lower, but would look to add onto that position on a pullback. VSAT, this has been on the watch list for a couple days. Basically, back-to-back high-tie flags. We moved from $7 up to $15, consolidate about 18% into the 20-day moving average. Nice pivot down here at 15 before earnings, then it explodes on earnings up 30%. And instead of pulling back after a 30% move, it just trades sideways, puts in a higher low on the 10-day, and now we're right at that high volume close. A recapture of that area is buyable versus the 5 day moving average to me, especially if we're in a speculative risk on market where small caps are really starting to pump. You're not going to get a cleaner high tie flag than this. LIDR, this is kind of a play that I am looking at because stocks like OPEN, which I thought I deleted all these resistance gaps, my apologies. Names like this are really starting to pump and they can make these massive moves. Doesn't mean you need to trade it if it's like not your type of trade, but it's a stock that has made a massive move from $1 up to like 6-ish, 640, pull back, starts to consolidate. right on the 20-day moving average. Pretty tight action here. Just looking for a break through today's high as an entry. Stop would be the 20-day moving average. You'd have to size that down a little bit. And I would actually really love to see a rally up into this like 315, 320 area, and then a tight day or so, just like open, just like NEGG did before the real move, but a name that I'm watching as a performance boosting trade. REZI, this is in the buildings product group. So home builders think just lower interest rates. That's a theme that's working. So we want to be focusing on the leader. This stock's already at 52-week highs, has already made a massive move from 14 up to 34. Now just looking for a pullback into the 10-day moving average and this gap zone low right around 31.90 as potential entry. And then SSRM, metals and mining, looking for a pullback into the 10-day and support gap down here at $16. Name that has been on a massive tear. But we don't want to buy extended. We would rather buy on a pullback kind of shakeout area at $16. On the short side, again, we'll sort by dollar volume. Some of the mega cap names and the leaders that have led this entire cycle were a little bit weaker on Friday. Still close green, but like relatively weak action. First one is Palantir. I do have a short in this already from much higher. Looking to add to that short at the right spot. Had a great flush on Wednesday to the support gap. Actually, a chart that I would study for like intraday snapback rallies if you're trying to add that to like your trading toolbox. Look at the action through the 50-day moving average. Things got extremely extended down, touches the support gap, and then immediately reverses there. That was a spot that I was covering, like as it was rolling down on my short. Still have about a third of that position on. Looking for a rally into the 10 and the 20-day moving average. Let it uppercut that area, then lose the daily VWAP. The short would be on the daily VWAP loss. Stop would be the high of the day. MSTR, it's not, this is the other name that I still have a short position on. We had this uppercut and fail the resistance gap, and then we lost the key moving averages. That's when I shorted. It's not quite ready for an add-on to that short, but I would be looking for this 20-day moving average and gap zone at 373-ish, and ideally some weakness out of Bitcoin to do so. If we just continue with strength and blow through that area, the 50-day moving average and gap at 390 is another spot that would still be a lower high overall, and a good risk reward spot. But this name just feels so heavy. Like it's at the 200-day moving average while Bitcoin's like near highs. Crypto crypto's pumping too. So the fact that this is not acting right is a big warning sign and something that I would like to short more of. GEV, this was on the short watch list coming into the day. We got the action that we were hoping for, a little uppercut in the 20-day moving average into that resistance gap, and then we failed at that zone, closed right near the low of the day. If we get another rally into that area, that's the spot I would watch. If you want to take it on weakness, you would have to make sure that the market's weak as well on Monday or Tuesday, whenever you trade this. But I really think this does have a date with the 50-day moving average at the very least. Build out another like true base before it gets going again. Roblox, we've seen some warning signs pile up on this. It got very extended going into earnings, gapped up on earnings, and then sold off that day, gap down, follow through, rallied up, confirmed the resistance gap, a lower high, then gap down last Friday when the news broke that they were getting sued, just chopped sideways, 50-day moving average caught up. You could argue that this is a long setup versus today's low. I I don't think that, but it's a good risk reward. So I wouldn't argue with you on that. But I'm looking for this on the short side with the NASDAQ positioning still being heavy, NAAIM at 98, and I assume climbing. So we had the uppercut and fail the resistance gap today. A lower high into that area is shortable versus today's high, or maybe the 20-day moving average, or losing the 50-day moving average on weakness, I think is another short spot. VRT, another name that was on the short watch list coming into today. We got the uppercut and fail of the 50-day moving average and the resistance gap. Now we're just looking for a lower high uppercut So right around that 129.25 area and the 50-day moving average versus the 10-day moving average and the high of today as our stop. ARM, one of the weaker semiconductor names. We did get a nice bounce off of the support gap. We've rallied for 2 days. Now we're looking for an uppercut and failure of the 20-day moving average. That would be a nice spot like before NVIDIA's earnings, but we'd have to see some like immediate weakness off that area to hold into NVIDIA's earnings because if NVIDIA blows it out of the water, I would not want to be short any semiconductor names. But if we can get an uppercut like earlier in the week and then like weakness close under the 200-day, then I might hold into earnings there. Wayfair, we got nice and tight over the 5-day right when exposure was pretty long. Got the gap down, closed under the 10-day. Today we uppercut and failed that resistance gap. That's another spot that I would be looking at right around $80 as a potential short. Uh, has already made a nice move up and feels like it's starting to lose a bit of momentum there. Not a name that I would want to short on weakness, only a name that I would want to short on strength where I can really keep my risk tight. NEGG, this is the name that I've taken a couple paper cuts shorting. I think I'm actually up a little bit of money shorting because I had my first short on this was pretty nice. But the name that has gone from $3 up to $130, and I really like how much trading is going on right at these highs at this resistance gap that we cannot close over. Because the more volume that you get at these highs when we do break down is just going to give you more selling pressure on the way down. Look at QMCO earlier in December. Look at BMNR earlier this year. When you get a lot of churning volume at highs after you're extremely extended already, that's a recipe for consistent selling pressure on the way down. SERV, this is a name that is trading below the 200-day, which is starting to slope down. The 50-day sloping down. Speculative name that because like a lot of risk on type names are going, I don't want to take this on weakness. I want to let this rally up, uppercut all these moving averages, get over this resistance gap, and then even maybe like test the 50-day as my entry versus the 200-day. But a name that has been weak, I don't really see it like breaking through and just ripping higher, but I want it to press through here, make some shorts cover, make some people get long, and then really get a tight risk reward on that short. And then ZEPP, another name that's like stalling at this resistance gap right at highs, a couple uppercut and failures at that spot. A name that I would rather take on weakness just because it's still above the 5-day. Volume hasn't exploded just yet. We're still in a risk on market. So I would rather like short this on weakness than on strength. But the more times that we test this resistance gap and fail, the more bearish I get on the stock. And it's another name that's run from $2 up to $46. We know they can go higher for sure, especially if we get like a gap up opening range break. I would not be looking to short that. I would look to cover if we get over the resistance gap. But on weakness, this is a name that we're starting to see this churn here without new highs on a closing basis. So might be time to get going to the downside. So that's the weekly prep video, weekly recap and prep video for August 25th to the 29th. If you guys enjoyed the video, please leave a like and subscribe to my channel. And if you want my market takes throughout the trading day, along with the live stream at the market open, you can sign up for the Discord using the link below. Have a great rest of your weekend, and I'll see you guys on Monday.